Hey guys, my name is Mike Anderson with the Reliance Mortgage Company. I've owned it since 1989. What's the market going to do next year?
Yeah.
Somebody said it was going to crash. Is that right?
Yeah.
I don't believe that. I can tell you this, that I'm involved in a lot of different things other than the mortgage business. We do a lot of mortgage business. I've closed about, I don't know, 11, $12 billion worth of mortgage loans in Texas for the last 25, 30 years. But as far as the market crashing and real estate going down, I don't see it at all, and I'll tell you the reason why. Real estate all over Dallas is going up. It went up 26% last year. And it's not only going up in Dallas, it's going up all over the country. Every sector you look at is going up. But what I look at is we buy and sell a lot of land, and I'm building a lot of affordable homes and a lot of expensive homes. And the price of affordable homes has gone from about $225 a year ago to about $275 to $280 today. And they're still lining up to buy them as fast as they can get their hands on them. As long as rates stay low, and the rates today are around 3.25% on a conforming loan, and conforming loans right now are 625, or actually they went up 647, 250, which means you can buy a house for $647,250 for 3% down, if you can believe that. BA has also raised their limits. FHA has raised their limits. So I think it's going to be 450. It'll be announced January the 1st, which means you can buy a house FHA for 3.5% down, and that money can be a gift money that you get from a friend, a relative, family member, mother, dad, brother, sister, whatever. But as far as the market crashing, there's 315 people a day moving into Dallas, which is equivalent of a full apartment house. And they're not just moving to Dallas, they're moving all over the Metroplex. I mean, we're building homes in Azle, Godley, Springtown, Midlothian, Cleburne, McKinney, Venus, Springtown, and I don't care where we go, they're selling as fast as we can get them. We're actually doing a development down in, we're buying some developed lots down in Cleburne, and there's 64 lots, and we put them on the market 2 weeks ago. We've already sold 17 houses, and the subdivision's not even completed yet. That's how much demand. And I think people are doing that because they want to lock in their prices. Mm-hmm. We lock in a price, and unless lumber keeps on going up, and the supply, that's another thing. Builders are having trouble getting appliances, lumber, concrete, everything's gone up. But it seems to has eased up in the last 2 months. It's easier to get supplies now. I think manufacturers are back to work.
Someone moving into the Metroplex, should they get a house? Should they wait because of the shortages? What should they do?
Well, I've had that question asked me a lot, and a lot of people are, the buyers in particular. Sellers love the market.
Right.
Buyers don't like the market because they have to bid on, there's so many contracts on a house. There's as many as 10, 15, 20 contracts on every house, and they're bidding them up. And the realtors are now putting in phrases that clauses in the contract that if the house doesn't appraise for what they're paying for it, they got to pay the difference in cash. You know, that's a really hard question to answer, but if I were going to buy a house, I'd buy it today because prices are still going up. The price of land is doubled in the last year. And whenever they develop lots, it's cost twice as much to build a property as it did 2-3 years ago. So there's a shortage of everything, and as long as there's a shortage of everything, there's a high demand for stuff, prices can only go up. I think that it's going to be a good market for the next 2 years minimum. The issue here is whether rates remain low. The government is borrowing so much money, and they're worried about inflation, which is a big problem right now. However, because they're trying to bring the economy back, I think they're going to keep the rates artificially low for the next 2 years. I think we may see from 3.25%, maybe 4% in the next 2 years, but nobody really knows when that's going to happen. But if I were going to buy a house, I would not wait. I'd buy it now. And I can tell you that the market has cooled off a little bit according to realtors in the last 2 months. And I think people are just tired of having to pay higher prices, but it's going to continue on, in my opinion. That's an opinion, not a fact, but I just think that it's a good time to buy a house in Dallas.
And how is this market different? People are concerned that, okay, the market's going to crash like 2008. Tell us what the differences are between where we are now versus what happened in 2008.
Well, what happened in 2008 was not the real estate, it was the mortgage lending industry. We were making loans back, and I didn't make them because I didn't like the loans. But in 2008, you could buy a house with no income, no asset, with as little as 5% down, in a lot of cases no money down, with absolutely horrible credit where you never paid anybody. The investors were selling those notes. Their rates were higher. They were probably 2% higher than the average rate back then. But it wasn't the housing market that crashed. It was the mortgage industry that crashed. I don't think you're going to see that again where prices went down. And there was a time back in 2008-9 when you couldn't even get a jumbo loan hardly. They were off the market for probably 6 months' time. It was hard to get any loans approved. The sellers, the people that buy these bonds, mortgage-backed bonds, were concerned that countrywide, all these big companies went upside down. IndyMac, the rest of them could not perform. So I don't think you're going to see that repeat. I mean, you may have some deflation in houses 2 or 3 or 4 years down the road, but I don't see it happening anytime soon. I don't think it'll be anywhere near the crash of 2008.
All right. So how can you help business owners that just started their business or recently in business but don't have quite?
Well, a lot of
years of tax
business owners out there that own small business are writing off everything in the world, so their adjusted gross income doesn't show a lot.
Right.
However, they generally have good credit. They generally have quite a bit of money in the bank, and they generally cash flow quite a bit of money out of their company. So what we do is take 24 months worth of bank statements and figure out what their expenses are in the bank statements, and you can get those loans approved with as little as 10% down up to $1.5 million. Most people actually put 20% down on them, but you can do them up to 10% down with up to $1.5 million. Credit scores are 680 or higher. The rates are about, well, we closed one in the last 2 weeks at 4%. We closed one as much as 5.5%. It depends on the credit score, the loan to value, how much you're putting down, how much cash assets you've got, how long you've been in business. But where there's a will of way, I mean, even if a person's been bankrupt and foreclosed, which nobody will touch, with 25% down, I can sell it off to an investor. The rates are not pretty, the points are not pretty, but at least you can get in the house. And a lot of the people that do that, they get their credit straightened up or get out of bankruptcy for enough time to get a regular government loan or a Fannie or Freddie loan. And then we do reverse mortgages for people 62 years and older. Actually, we did the first reverse mortgage in Texas. We do a lot of those. We do land loans, lot loans. In fact, if you can't get a loan from us, it can't be done. I will guarantee if we can't get a loan for you, nobody else is going to get it for you either.
Okay, so you have a new program. Tell us about.
Yeah, there's actually a company that the government requires on a homestead, that's your homestead where you're living and not an investment property, that you show the ability to repay it. And there is a company here that just came into existence. I don't quite frankly know how they're doing it. We closed 1 or 2 loans through them that with 20% down and good credit, I'm going to say the credit score's got to be 680. You can get a loan from them with absolutely no job whatsoever. They just look at your assets, how they're getting around the federal laws. They say they bought a company that's exempt from those federal laws, but as long as they're doing it. And we closed a couple of loans through them. The rates on those are around 5.5% to 6%. They're a little higher rates, but if you can't get a loan any other ways, it's the only way you can go. I can guarantee you there's no mortgage company offering that in Dallas.
Can you do that for new construction?
Yes.
Okay.
If you can get a bank to make the interim loan.
Right.
You know, the banks like to see that you can go. What the banks do, if we get an interim construction loan, they want to see a letter from us. It's a takeout letter that says when this loan is completed, then we'll make a loan. We did that with yours.